Hello everybody and welcome back to my channel. My name is Smart Money Mo, and in today's video we're going to be going over how you can master market structure using my trendline theory. And so before we get started, I'm just going to quickly say check the Instagram down below where I'll be posting educational content, and make sure you message me on Telegram if you'd like one-on-one mentorship. But let's get started with the video now. So the trendline theory. Before as we go along with this trendline theory, I'm just gonna be pointing out some small things that you guys must keep in mind when using it. And as I say something, think about how we can apply it onto the trendline theory and eventually on the real life charts. So most of the time, price will be moving in trend lines, right? And I say most of the time because it's not all the time. And we should never enter from the trend lines, right? Exactly, entering from them, like the old retail method, of just drawing out a trend line and then entering from whenever it hits the trend line. You don't want to be. That's not how you want to be trading using trend lines. And instead, we should never trade using trend lines, and instead use them to understand market structure. And through the use of a trend line, we can understand whether price is being overbought or oversold. And for now, we're just going to focus in on these 4 bullet points, right? So first of all, like I said, price will nearly all the time be moving in trend lines, right? And so let's just identify the structure. First of all, we know that this is a bearish structure, right? Because price is creating lower highs and lower lows, right? So this is clearly bearish structure. Now, if we take a look at now looking at the trendline theory and what exactly is going on. So whenever price seems to get close to this trend line, it always seems to be moving to the downside, right? And you can say that is because as price gets closer to this trend line, we are hitting supply zones or sell order blocks, right, which is causing price to move to the downside. However, there is also a second reason why price always moves to the downside as we get closer to the trend line, because whenever price gets closer to the trend line, right, price is overbought. So when price is overbought, it tends to go down. If you're familiar with some of the indicators that you may have been using in the past, you know that when price is overbought, you usually sell. However, we're going to be using that plus order blocks, and supply and demand and this trendline theory. So I'll say that one more time. Whenever price gets closer to this trend line or is at the trend line, right, it will usually start reacting from supply zones, right, causing price to go down. We can say that when price gets closer to this trend line or is at the trend line, price is overbought, right? And so we should be looking for sells. And that's exactly what I've written here. When price is overbought, we should look for sells, right? And we're going to go over this one right now. So what happens at the bottom of the trend line, right? When price is further away from the trend line, so at these points, price is oversold, right? So at these points, price tends to go back up, right? And that is usually because of some sort of demand zones in the lower time frame, right? Or some sort of demand zone all the way back here on the higher time frame, right? And price is reacting from it. But the main thing to keep in mind is that when price is oversold, we should be looking for buys on the lower time frame. And when price is overbought, we should be looking for sells on the lower time frame, right? So if you just think about this in a more logical or practical way, when price is closest to the trend line, right, or right here, we know that we expect price to go down, right? So selling at this point would be quite a smart and logical thing to do. However, buying at this point would be not a smart thing to do, right? It wouldn't be smart if you decided to buy at this point, or even on as we get over here, or for example, like as the closer we are to this trend line, the less you want to buy, right? Because price is being overbought, and you want to be looking into getting some sells, right? And the same thing on the other side, right? Because we're quite further away from this trend line, and we know that whenever price gets close to the trend line, it tends to go down. Selling at this point wouldn't be very smart, right? Or selling at these points wouldn't be very smart, right? Because we know eventually price will have to come back to this trend line, you mitigate an order block or a supply zone within this area, and then continue its higher time frame trend, right? So that's exactly what's going on in terms of market structure in this example, right? And it's the same thing in terms of a bullish structure. You guys can work that out. So okay, one thing the last thing I'd say as we look at this trendline theory is that the closer price is to the trend line, always think about the sentence, right? And then finish it off yourself, right? So in this example, the closer price is to the trend line, price is overbought, right? So the closer we get to this trend line, price becomes overbought, and we start looking for sells, right? So always think about that. Think, the closer I get to whatever trend line it is, right? So if we're thinking about a bullish structure, right? The closer price gets to the trend line, the more oversold it becomes, right? So then I'm going to be looking for buys. Buy is always the opposite. Overbought, we look for sells. Oversold, we look for buys, right? And of course, always remember, you never enter from the trend line itself. Never just go onto this trend line and enter from it yourself, right? Or you go over here and you enter from the trend line yourself. Just don't do that, right? You're asking to get stopped out, or to get a bad RR, or to get, a huge stop loss. Instead, when price gets closer to the trend line, in this example, we're going to start looking for buys, right? From perhaps a zone over here, or a demand zone over here, right? We're always entering from order blocks, supply and demand zones, Wyckoff, so on and so forth, right? Smart money concept ideas. And in this example, when price gets closer to the trend line, we're going to be looking for sells, right? Because price is overbought. I'm imagining you're getting it now. So let's move on to the process that I use. First, I'll start my analysis on the higher time frame, right? This is something that you should always get used to doing. If you haven't watched my top down analysis video, go watch it. I explain why exactly we're starting on the higher time frame, is to understand the higher time frame bias, right? And then once you identify your higher time frame bias, or identify the most recent area of trend, add in your trend line, right? The same way I did it over here, add in your trend line. So over here we had bearish structure, right? So let's say you found bearish structure as well, add in your trend line. Sorry about that. Then think, is price overbought or oversold, right? Because then we can start judging how we're gonna be looking for POIs on the lower time frame. So let's just say at the current moment price is oversold, right? So we've got bearish structure, so I'll start writing this down just as an example. We've got bearish structure, so that's number one. We've got bearish structure. Number two, we've identified that price is oversold, right? So if price is oversold, what does that mean? Well, so if I just create a small example here, so we're bearish and price is oversold. So what does that mean? That means we're further away from the trend line, right? If price is oversold, we're further away from the trend line. So let's just say, right, in this current moment, price is oversold, right? And let's just say that's the example that we're going with right now. And then number three, think, is price oversold or overbought? We just established it's oversold. And then move on to the lower time frame with that bias, looking for POIs to enter from, valid POIs to enter from. So number three, right? So this one right here, with that bias. Now, if you're confused about what I mean with that bias, if we know price is oversold, what are we going to be looking for on the lower time frame? We're going to be looking for buys, right? So we're going to be looking for valid demand zones, valid buyer order blocks to be entering from, right? So buy, that is my bias, right? Or we can write bullish zones, right? So despite us being on the higher time frame bearish, we are still able to trade counter trend, right? We can always find opportunities in the market. So we can find opportunities in the market when we are here. We can also find opportunities in the market when we are here, because now we can establish whether price is being oversold, overbought, how far away it is from that general trend line, right? And so let's move on to a real life chart example on Euro USD, and I'll see you guys there. Alright, so now we're here on Euro USD and we're on the daily time frame, and that's how we're going to begin this analysis, right? So on the daily time frame, I'll just delete this real quick, right? So if we just look at the most recent area of trend, so we're going to be following the same steps that I had in the PowerPoint slide. So if you ever need to go rewind and recheck those as we play along with this video. But so step one, identify our higher time frame trend. Clearly we are bearish, right? You guys should know this from now. We are clearly creating bearish structure, right? And so what do? We put in our trend line, right? Very simply, place your trend line. Doesn't matter, it doesn't have to be perfect. We're just using it for general understanding whether price is being oversold, overbought, so what, so on and so forth, right? So I had a previous one which was quite good, so I'll just get that one in, right? There we go. So that is our trend line, right? And now we've identified our trend line. So what we're gonna do is we're just gonna move on to the 4-hour time frame, right? And if I just one thing that you need to keep in mind is that you will whatever time frame you're on, you will always understand this trend line. We are in bearish structure, right? And now let's begin to understand where the price is being overbought at, oversold, and at certain times, right? So over here, we can see that if this is just the start of the trend line, right? We saw that price was overbought at this area, or even over here, right? Price was overbought because it came quite close to the trend line, right? And if price is close to the trend line, then we know that price is overbought, right? So I'll just write that down, right here. Price is overbought because we are close to the trend line. You know what? I'll actually just do this on the daily time frame because it has the same effect. So at this point in time, price is overbought. So I will be looking for sells on the lower time frame, right? So if I just box out this area, right? Now I'll be looking for sells on the lower time frame. I'll be looking for sells because price is overbought, right? And we're gonna be doing this over here. But for now, let's just understand what it's like to see overbought and oversold structure on the real life charts. So we've established over here price is overbought, so we're going to be looking for sells when we move on to the lower time frame in that example. Let's do the same thing again with a different point in the market. So let's just say over here, right? We'll just say right there. Right there, we are further away from the trend line. Relatively, we are further away from the trend line. So what's going to happen is price is right now oversold, right? And we can just write that in right there. And so on the lower time frame, with this area over here, right, I would be looking at buys on the lower time frame, right, because price is oversold. So you can see this process starts to get quite simple when you begin to understand exactly what's going on. Now, one thing you always have to keep in mind is that, again, we never enter from these trend lines, right? We always enter from the lower time frame, or the relatively lower time frame, through order blocks. But if you just see in the previous examples, right, now if I move on to the 4-hour time frame and I show you exactly what's going on, whenever we get closer to this trend line, price is usually about to mitigate some sort of order block, right? So there could have been an order block there. It's not refined, I know. Okay, maybe not over there, or somewhere over here, maybe perhaps, or perhaps over here. Price is mitigating an order block within there. Price is always going to be mitigating order blocks, right, whenever it gets close to this trend line, right? And so there could have been one here. It could have been mitigating an order block somewhere within this area, which caused price to have bearish structure, right? And we're going to see loads of examples over here as well. So in this area over here, on the lower time frame, so for example the 1 hour, the 30-minute, there's going to be loads of bearish order blocks which you could have been able to enter from and catch some of these moves, these giant moves of 250 pips, so on and so forth, right? Now let's apply the same logic, right? The same understanding of the trendline theory right now. So if I move back onto the daily time frame, right now what do we have, right? We are further away from the trend line. So what do we know? Price is being price right now is oversold. So if price is oversold, what does that mean we're looking for? We're looking for buys. Right now, so what I'm going to do is I'm going to circle out this area right here, right? And now I'm going to be looking for demand zones on the lower time frame, right? And we're just going to see what we can find on the lower time frame that's going to help us take a buy, right? It could be Wyckoff, demand zones, bullish order blocks, so on and so forth. So if we just go into the 4-hour time frame and see exactly what's going on, I'll just delete this because we know that we're looking in this current area. So there could be a demand zone within this area, possibly. However, we've already seen reaction from it, right? So we'll just move on to the 2-hour time frame because there's not much we can see. We can see this area of structure being broken over here, however, so we can keep that in mind as well. Let's call that our break of structure here, right? So we had a break of structure, that will change of character. We'll move on to the 1-hour time frame. We'll see if we can see anything more clear. All right. Really often with big wicks, there's usually an order block within it, so we just boxed out that area over there. And we can see recently liquidity over here has been swept in, right? This bullish order block has been mitigated, right? It caused this area of structure. And recently we've just seen a break of structure to the upside over there, right? So now we'll just move on to the 30-minute time frame. And yeah, so I definitely suspect that within this area there's going to be some sort of order block, right? Because it's the last down move. So it's the last down move before the up move, which broke structure to the upside, right? And I'll be making a very in-depth video on order blocks soon. So yeah, so this is the last down move before the up move, which broke structure to the upside, right? So I'm anticipating that there will be an order block within this zone. It's time to watch my refining video, because now we're gonna refine this order block, right? So we'll move on to the 15-minute. Okay, not much change. 10-minute. I suspect a zone within here now. 5-minute time frame. There we go. Right, we've got a zone right here. Right, you can probably refine it even more, but I don't want to over refine. Right, and that's gonna be our order block. Now, because this is a refined entry, I'm gonna go for a lower time frame confirmation entry, which I'll make a whole video about soon. So now we can just extend this to the right. This is our demand zone that we're looking to enter from. So if I just play price now, if I go to the 4-hour time frame and I quickly play price, right, to about here, actually I'll replay to about there, and we move back onto the 5-minute time frame. Now, because I'm entering from this refined zone over here, I'm going to look for a lower time frame confirmation entry. So I'm going to wait for price to show me some reaction. Then I'm going to try and find a zone within that area of reaction. I'm going to enter from there on the second tap, right? So right here, price is getting closer and closer, right? So I'm just going to keep this here. There we go. We've tapped in, right? And from that tap in, right? So I'll slowly play price. What I've created here is a lower time frame order block that we're going to enter from right here, right? So slowly, I'm actually gonna break this down. So we had this order block over here, right? Now, I said I'm gonna go for a lower time frame confirmation entry. Price has tapped into our order block now, and now I'm gonna enter from this zone over here, right? Instead of entering that previous zone, because I wanted a better RR, right? And then we'll think about take profits in a second, right? But for now, just know that I had a lower time frame entry, right? I started off with this refined order block, saw reaction. Now I'm entering from this lower time frame confirmation entry, right? And we've established a risk to reward of 1 to 19. It was actually 117 before, so we can quickly just check what I've done differently. Alright, it's basically the same thing. It's just, so yeah, there we go, right? Now, take profits. I had the old take profit here, right? So for now, we'll just set our take profits at, I think it was a 4-hour order block, or maybe a 2-hour order block, was it? 1 hour. Okay, so we had this 1 hour order block, right? It is already seems to be mitigated. However, I'll just keep my my take profit right at the top there, right? So why am I saying my take profit here? Is because there is a small chance that when price comes to about this area, we can see reaction from this order block, and so I want to close out all of my entries beforehand, right? So or the majority of my entry, I want to close it before we when we reach this order block, right? So now if we pay price, we're tapped in, we're now entered from that lower time frame order block, enabled 1 to 20 risk to reward, and the 4 pip stop loss, right? And now we hit take profit soon enough. There we go, we hit take profit, right? And now the thing I need you guys to keep in mind is that despite us being bearish on the higher time frame, we were still able to take buys because we were using that trendline theory, right? And so exactly, we were able to trade counter trend, right? We are bearish on the higher time frame, however, we were still able to get an entry on the lower time frame because of the trendline theory. We knew that price was oversold within this area, right? And so we were able to catch an entry right there. I'll quickly refresh my page because it's lagging a little bit, right? So yeah, so we caught our entry from that area, and that's exactly what happened, right? That's price tapped us in, and we caught that entry. But one thing we have to keep in mind is that I'm still gonna hold some of the trade, right? Some of this trade. You should still hold 0.1 lots of this trade, right? However, or whatever, like 1% or 10% is of this trade, because it's very possible that price, because like I said, right now price is oversold, right? So we're gonna start returning to that trend line. So we expect price to reach areas all the way over here, right? Possibly mitigating order blocks, for example, here or here or here. Like I'll show you actually. So we could be mitigating an order block here, right? And so I could very well set my overall take profits all the way up here, right? And that would secure me 175 pips. Or I could secure an overall take profit, go on to the 2 hour time frame, maybe the 1 hour time frame, 30-minute perhaps an order block there, which I think is already mitigated. So we can just use this one for now, right? We've got an order block there. Or in fact, you can set your overall take profit at this imbalance right here, right? When this whole imbalance gets mitigated, then you can set your overall take profits there. And you know, you can just hold part of your trade until that very point. However, for now, I'll just, for the sake of this video, we've caught this 1 to 20 risk to reward trade, 4 pip stop loss. We used the trendline theory, overbought, oversold. We used everything. I hope you guys enjoyed this video. I hope you found it educational. Leave a comment down below asking me any questions. Leave a like, subscribe, and I'll see you in the next one.